Hey everyone, welcome back to Corporate Decoder. Today, Stage just filed an 8K report announcing its second quarter 2026 results, and I am seeing some interesting points about their financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company released its earnings, and we'll break down what these numbers really mean for State Street Corporation. State Street Corporation, known by its ticker STT, is a major player in the financial services and asset management world. We are looking at their latest current report, which is a Form 8. Okay, this kind of filing is typically used to announce major events that shareholders should know about, and in this case, it's all about their second quarter financial results for 2026. The reporting date for the event that triggered this filing is the 16th of July 2026. This means that on this day, State Street Corporation officially announced its performance for the second quarter of 2026. Think of it like this: if a company were a student, this is them handing in their report card for the last 3 months. This section kicks off the core of what we need to understand. It tells us that State Street issued a news release on the 16th of July 2026 to share its results. We are also getting 2 accompanying documents, Exhibit 99.1, which is the news release itself, and Exhibit 99.2, which is a financial information addendum for the second quarter. These are important because they contain the specific numbers that tell the story of how the company has been doing. Next up, we have Item 7.01, which deals with Regulation FD, or Fair Disclosure. This rule is all about making sure that when a company releases important information, it's shared with everyone, not just a select few. In this filing, State Street provided a slide presentation on the 16th of July 2026. This presentation likely breaks down their second quarter performance and offers additional context, perhaps for an investor conference call happening the same day. This is often where you find the slides that management uses to explain their results to investors. Finally, Item 9.01 lists all the exhibits that are part of this filing. This is like the appendix of a report. We see the news release, the financial addendum, and the slide presentation listed as Exhibits 99.1, 99.2, and 99.3. These are the documents that provide the detailed backup for the announcements made. It is worth noting that these exhibits are furnished, not filed, meaning they are provided for information but don't carry the same legal weight as filed documents. Now let's dig into what the company might be saying in those exhibits. While the 8K itself is brief, it points us to the actual financial performance. Based on recent news and the nature of these filings, State Street Corporation likely reported on its earnings per share, revenue, and profits. Considering they are a financial services company, key metrics would include things like assets under management, net interest income, and fee-based income. These are the numbers that truly show the health and growth of a company like State Street. For instance, if assets under management are growing, it suggests clients have confidence and are entrusting more money with them. Higher fee income points to their success in providing valuable services. These exhibits are essentially the raw data. The news release is likely to highlight positive achievements and put a favorable spin on the numbers. The financial addendum will provide the detailed tables with year-over-year and quarter. Over quarter comparisons, we would look for things like how much did revenue grow or shrink compared to last year? Did their expenses increase or decrease? What's the bottom line? Are they making more or less profit? This is where the real meat is. In past reports and considering their industry, we would expect to see metrics like net income for the quarter. Let's say, hypothetically, it came in at $800 million. If this is down from $900 million last year, that's a concerning drop. Revenue figures, for example, if they reported $3 billion and last year it was $3.2 billion, that is a revenue decline. Earnings per share, or EPs. This shows how much profit is allocated to each outstanding share of common stock. Assets under custody and administration are crucial for a company like State Street. An increase here usually means more business. Total revenue is vital. If this is going up, it means the company is bringing in more money from its operations. Looking at State Street specifically, financial news suggests they recently surpassed earnings and revenue estimates for Q2 2026, which is a positive signal. Surpassing estimates means they performed better than Wall Street had predicted. This is a sign that their strategies are working, or perhaps that market conditions were more favorable than expected. It's like a student getting a better grade than their teacher thought they would. When looking at their common stock, a key indicator is often the price to earnings, or P/E ratio. A low P/E ratio like the 2.9 mentioned in external data can suggest that a stock is undervalued by the market, or that investors expect lower earnings growth in the future. It means you are paying less for each dollar of earnings the company generates. This can be an attractive sign for value investors, but it's important to understand why the P/E is low. Is it a temporary dip or are there underlying issues? The filing also mentions depository shares representing preferred stock. This is a way for companies to issue preferred stock in smaller, more manageable pieces. Preferred stock usually pays a fixed dividend and has a higher claim on assets than common stock, but typically doesn't come with voting rights. Changes related to preferred stock can sometimes give clues about the company's capital structure decisions and its ability to raise funds. The signatures section is the formal closing of the document. It signifies that a duly authorized person from State Street Corporation is attesting to the accuracy and completeness of the report. In this case, Elizabeth M. Schaefer, Senior Vice President, Chief Accounting Officer, and Interim Controller, has signed on behalf of the company. This is a standard part of all SEC filings, confirming that the company stands by the information presented. So, what's the takeaway here? State Street Corporation seems to have had a solid second quarter, meeting or exceeding expectations based on the news. However, the real story is always in the details within those exhibits. We need to look at how much their revenue and profits grew, how their key business segments are performing, and whether their expenses are under control. A low P/E ratio like 2.9 might signal an opportunity, or it might be a warning sign that the market expects challenges ahead. The risk I am watching is whether the positive Q2 results are sustainable or a one. Off, what I am actually looking for is a consistent trend of growth in their core businesses. Oh, and the research tools I actually use are linked in the description. They help keep this channel going, that is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more, and join our Discord community through the link below.